Benzinga reporter here, Aaron Breed, joined today by Mike Roper, the CEO of Muscle Maker Grill, as well as Kevin Mohan, the chairman of the board and chief investment officer. Mike and Kevin, how are you guys doing today?
I'm doing fantastic. How are you, Aaron?
I am good. Thank you for asking. Let's hop right into it, and you guys can kind of, bounce off each other. You let me know who wants to take what questions, but let's start with an easy one. Tell me what it is exactly your company does.
Well, that's actually pretty easy. We are a restaurant-based company, so we have restaurants all over the United States. We serve healthier for you food, and that's really the whole intent of us is to serve healthier food of taking everyday items that are out there and making a healthier version for you. So we've got Muscle Maker Grill restaurants, we've got Pokemoto Hawaiian Poke, and we also have Superfit Foods, which is a meal prep company. So that's us in a nutshell.
Got it. And so, what have you guys been up to in the last 6 months or so?
Well, what haven't we been up to? I think is a better way of saying it, right? We are always busy, right? We are running around like crazy people all the time, always looking to how do you diversify the company or grow the company. And so in the last 6 months or so, and you probably have seen, in the last day here or so, we actually made an announcement. We've been going pretty well against developing the franchise growth strategy with our Pokemoto brand. We have actually signed over 50 franchise agreements here recently and started opening up some of those locations. So that's been taking up most of our time. But then obviously in the last couple of weeks, we've also announced a big deal with a international company called AGGIA, which is in the international shipping of physical commodity business. And that's pretty exciting for us as well.
Yeah, and so my next question was actually going to be about Agia. So this vertical integration initiative. Do you mind just breaking that down a little bit further? Maybe a 30-second recap there.
Sure. And Kevin, you want me to take this one? Or you want this one?
Sure, go ahead. I'll jump in a minute.
Okay. I keep forgetting Kevin's there, right? And we go from there, and I monopolize the conversation. No, so the whole Agia deal, look, it is a very unique agreement. It is a pay-per-performance agreement that could lead to a change of control of Muscle Maker. As I mentioned, Agia is an international commodity shipping company, framing up very basically. So they ship products like wheat, corn, soybean from one country to another across, ships and cargo ships, right? These things range anywhere from 25 to 70,000 metric tons in size. That can be between $5 and $40 million per shipment. So really significant from there. But again, this is a pay-per-performance model. It is based on Agia generating net income into our new subsidiary, which is called Sadat. So it's a wholly owned subsidiary we created specifically for this agreement. If they drive net income into the company, then they can earn shares of stock in Muscle Maker. Pay for performance. You got to drive net income in. If you don't drive net income in, you're not going to earn any shares. The key here is those shares are also being earned at a premium price to the stock price today. It's at $1.5625 per share, which is higher than what we're at today. So Agio actually believes in the business model, believes in what they can build, and they're willing to pay that price of a premium to earn these shares of stock. Now, what's really kind of cool about it, more than anything than all of that's just there, is that we get to continue to execute against our business strategy we have today. So we continue to execute against growing the franchise business model through Pokemoto. So we're over there doing that as Agia comes in and helps diversify the company in this commodity side of the business. So pretty significant impact on the business overall.
Got it. Thank you, Mike. And I'll direct this at Kevin. Do you have any thoughts on the deal from more the investment side? Why that's attractive for shareholders of Muscle Maker right now?
Yeah, so I think it was important for us as a business. One thing I will say for Mike and the rest of the team is that they are adversity experts. And so if you sort of look back in time at what this company has been through, shortly after we went public, the pandemic hit, and obviously that was catastrophic for a lot of businesses, but restaurants specifically. And so I feel like, we've sort of had an uphill battle since then. And so I think what's most attractive and what we're really excited about for shareholders is that the goal has always been build shareholder value. And I think that sometimes that looks like a traditional path, like Mike and his guys building the franchise model. But sometimes you have to do something that's a little bit off the beaten path. And so I think investors aren't really sure what we did. It's still a little, I don't want to say confusing, but I think people are still trying to figure out what it all means because nothing like this has ever been done before. And so when you have a company that is improving their numbers quarter over quarter and losses are narrowing and we're doing what we said we were going to do, and you're still trading below cash, then I think you have to do something a little bit different. And that's exactly what we've done.
Got it. Yeah, that makes a lot of sense. So, how does this news and this deal affect Muscle Maker's ability to look at new M&A opportunities and exercise its business strategy going forward?
So I think that it enhances what we're trying to do. I think that, Mike and the rest of the team has always been very opportunistic in looking at anything that can create shareholder value. And so, the pokey business itself is very fragmented. And so, meaning that there are a lot of sort of onesie, twosie types of locations. And there isn't really an 800-pound gorilla in the space. And so I think when you look at Mike's experience and the experience of the rest of the team, I think that there's a real opportunity for us to go out and try to be that 800-pound gorilla. So that being said, I think growth through acquisition, looking at different M&A strategies and things of that nature is something that we will continue to look for.
We actually carved out that specific ability inside the agreement, right? That we can actually go out and do M&A. We can, open new stores. We can, modify the existing footprint, whatever we want to do, right? That's in there. So we made sure that was in the agreement. So we had that flexibility. Now, one thing that's really key in the agreement as well, I guess two things, is any cash that we have on hand today or when we sign the agreement, that stays focused on growing the Pokemoto franchise model. Right, so they're not taking that cash to grow the AGGIA commodity side of the equation. They're funding that on their own, basically, right? So we get to keep the cash that's there and focus it towards this growth model. And then if the share price goes up and if people execute the warrants that are out there, that would be another significant input of cash into the company that gets dedicated towards the restaurant divisions as well. So we actually made it that we can really continue to develop and move forward on our growth strategy, just like we always have. Nothing changes there. And then this other stuff, meaning, AGGIA and the commodity side of the business, which has really significant impact potentially on the financials overall, is something that grows with those experts. So we actually have us as experts on one side, the AGGIA team as experts on the other, put them together, and it's a win-win kind of situation.
Yeah, it sounds terrific. I'm glad you guys are able to explain a little bit more about that deal because, like you mentioned, Kevin, it's a little bit convoluted when you first look at it. But Kevin, Mike, thank you guys so much for joining me today. Is there anything else you guys would like to touch on before we go?
No, I mean, I would just say this, I think that the team has been really good about putting news out there. I think they've been very diligent in keeping our investors and our shareholders informed, and be on the lookout, Muscle Maker's on the move. So
yeah, but I'll just throw in there that I'm really excited about what we're doing here and diversifying this, right? We've got a lot of opportunity in front of us. And like we said earlier, we're always looking at ways to improve the company overall. So this is just the next stage in that entire development.
Well, there you go, Mike and Kevin from Muscle Maker Grill. You guys enjoy the rest of your day. Thank you again for joining me. Ticker GRIL. You guys enjoy the rest of your week.
Thanks, Aaron.
Perfect. Thanks, Aaron.